An individual's wealth is composed of two types of capital. The first one is probably the one you're familiar with and is known as financial capital. It represents the amount invested in all stocks, bonds, or other financial securities that you have accumulated over time. As you grow older, you are likely to make more and more investments, which causes your financial capital to grow with time. The other component is lesser known and is called human capital. This represents the present value of the income you will be earning over your lifetime. As you get closer to retirement, you have fewer and fewer working years left, which causes human capital to decrease. Most online investment tools today only hedge against financial capital risk, but fail to account for human capital risk, which is even more significant early on in one's life. Optimata creates an optimally hedged portfolio that takes into account both types of risk.
To construct the optimally hedged portfolio, we chose 15 different exchange-traded funds known as ETFs. These ETFs mimic the performance of different industries as well as companies of a particular size or potential for growth. We first calculate the historical returns for an individual's existing stock portfolio. These returns are then regressed against our 15 chosen ETFs. The regression gives a beta value for each ETF. The beta represents the sensitivity of the individual stock portfolio with the particular ETF. A positive value suggests a positive correlation between the two, which means we should sell the ETF, whereas a negative beta value means we should buy the ETF.
Let's assume our user owns shares of Microsoft, Apple, and Google. Let's see what the optimally hedged portfolio looks like. As we expect, since the user only owns stocks in large technology companies, Optimata suggests shorting VGT, the technology ETF, and buying VBK, the ETF for smaller companies. Our application this semester hedges against the financial capital risk of a user. Next semester, we aim to incorporate human capital risk as well.